Todd, let me begin with you. And before we talk to big market concepts here, talk to the index investor who owns, say, a Schwab or a Vanguard or a State Street Index 500 mutual fund that is market cap weighted. Should they be concerned about that level of concentration? And is there another kind of fund that indexes but is not based on market value?
Yeah, Tyler, great to join you today. It's a fantastic question. If you think back to mid-2020, 2021, there was a lot of consternation about the weight of the top 5 stocks, right, making up a quarter of the index. Names like Amazon and Meta have declined, but what has remained consistent is the strength from Apple and Microsoft, right? And as you mentioned, they're 13% of the S&P now. Yeah. It's the highest in 40 years of data. And so if you're passive, you're thankful that these stocks are acting well, but I want to keep in mind that if they do ever take a hit, your portfolio will be in danger. And so I want to look at the equal weight S&P 500 to help balance out, right, that concentration towards Apple and Microsoft. That's the average stock, a great way to measure how much participation there is. And it's more reflective of, say, financials, materials, industrials, and energy. If you're worried about the concentration risk from those two mega cap tech names, keep an eye on what the equal weight S&P is doing to at least feel a little bit more comfortable with how your portfolio is positioned right now.
Equal weight versus cap weight. Bob Pisani, are there funds, are there ETFs that are equal weight as opposed to the traditional market cap weight?
There sure is. RSP, equal weight. You can buy it as a stock, just like you can buy the S&P 500 market cap weight. These have been around for a long time. I'll tell you a very simple problem. For very large parts of the 2010s, they notably underperformed the equal weight index because tech was a dominant sector for the last decade or so. And because of that, the S&P 500 market cap weighted outperformed the RSP. I look at this slightly different, Tyler. 20% of the market cap of the S&P is about 5 companies, but top 10, which is I think what we ought to look at, is 28%. Now, here's a good question. 28% of the market cap is top 10. Is this historically unusual? And it is slightly. This is a little more concentrated than it used to be. I'll show you, go back to 1980, 25%. The top 10 were 25%. 1990 was 20%. Look at this number. This is the top 10 concentration. 23% in 2000, 18% in 20. Today it's 28%. So Todd's on to something. This is a little bit top heavy right now, and I do think it goes to the concentration risk there. You do have to understand what you've got. If Apple has serious problems, then the S&P is going to have serious problems. But nobody complained about this when technology was a dominant force in the 2010s.
What else, off the top of your head, without being exhaustive here, Bob, in those top 10? What are some of the other names that we would see? I assume you're going to see a Facebook, an Alphabet. You're going to see some of the familiar techies, but maybe also some healthcare, some retail.
Yes, Alphabet's about 3.5%. That's number 3. Number 2 is Amazon at 3%. Tesla's 2%. And believe it or not, Berkshire Hathaway is the number 5 at 1.5%. Then you start getting down to Johnson & Johnson, Procter & Gamble, but they're a lot farther down. The top 5 are about 21% of the S&P.